Okay, watch list creation. We've got the Wall Street Open coming up the next couple of minutes, and we're looking at silver here. My trading window is between 10 and 12, 10 a.m., 12 p.m. New York. As we can see, the trend predator indicator, I'm testing the pro version, which is due to be released on a free trial basis for subscribers. Get in touch with me if you want details about that, if you want to trial out this indicator. But this is the pro version, and the pro version gives you setups. It will signal setups to you as they come out, setups according to the strategy which I use, which is the multi-time frame strategy, whereby we're looking at monthly, weekly, daily, 8-hour and 4-hour confluences, whether the time frame is bullish or bearish, and we're looking for the majority of the time frames to be either bullish or bearish to give us a directional bias for a trade setup, for which I teach the trade setups in my coaching services under the trend predator approach. So here we have a scenario where the context is a reversal and counter trend. Right, so the trend is up. The trend we take from the higher time frames, monthly and weekly. As we can see, we had last month a month that broke down, but last month broke down. What did it break down? It broke down November's low. Okay, there it is there. But then, as you can see, this month, even though we broke down last month, we also pumped back up inside last month, then dropped out, and then again this month we've pumped back inside of that range. So we're back inside of November's range, therefore we have a fake out low. So this breakout was a fake out. Fake out of what? The low of November. So we call it a fake out low. So that's bullish. Last week was a first green week following 1, 2, 3 down weeks. Okay, last week was the first green week. That's bullish. We anticipate the continuation, and that's exactly what we've got. We've got the continuation this week of that bullish green week. Okay, and we've broken out of that bullish, that first green week's highs. So that's bullish. So we have a scenario where we have a trend that is bullish, but we've got a reversal, or we did have. Now that Wall Street is open, we are pumping back above yesterday's highs. So in fact, everything I was about to say, that we are a reversal into the uptrend, but now that Wall Street's opened, as you can see, the indicator is giving us a context of an uptrend because everything is bullish in line of the uptrend, right? So we are in an uptrend. Now, that all depends on how the price behaves in real time around that high, yesterday's high. Above yesterday's high, we are still in the uptrend. Below yesterday's high, it is a reversal into the uptrend. Okay, so at the moment we're trending, but if we come back below that level, then the context is reversing counter this trend. Okay, so at the moment, while we're above yesterday's highs, we go down to 50-minute chart, I can only assume that we will stay above those highs, and I'm looking for a continuation of the uptrend. Okay, and I've got certain rules which need to be applied in order to take a trade long, but they are reserved for my students, those rules. But at the moment, there are prospects of a continuation to the upside. That is for silver, so that's bullish. Gold, probably the same scenario, so we don't need to go through that. Looking at oil, oil is conflicting. It's a mixed scenario, so I'm not even going to look at it. Don't want to waste my time on something that's not going to give me a best trade setup. I don't trade in mixed conditions. So just to explain that, so the monthly chart is broken out as bullish. The weekly chart is bearish because it's a fake out high. The daily chart is bullish because it's a fake out low. We're at 3 weeks of longs, so that's bearish. We're bearish on the weekly chart, but we're semi-bullish on the daily chart. I say semi-bullish because we've broken back above yesterday's lows, so that's bullish, but we're doing so in what is otherwise bearish because we broke bearish on the weekly chart because we broke out of last week's highs only to come back inside. So while we're below last week's highs, I don't want to buy into what could be resistance. So that's the conflicting scenario. So we're bullish on the daily chart, but we're bearish on the weekly chart. Okay. On the monthly chart, we are bullish because we broke out of last month's highs. But who's to say, because of this weekly fake out high of last week's highs, we're not going to come back down and retest last month's highs? Okay. So even though we have broken back up inside of yesterday's lows, that could just be a pump before the dump. So breakout, pull back, continuation. If we get below yesterday's lows, so if we go into replay mode, you'll see here the trend predicate indicator is giving us still, it's mixed because we've got a breakout on the monthly chart, but at least it's giving a context that's a downtrend because you've got a fake out high on the weekly and you've got a breakout on the daily. So in this scenario, there are prospects of a downside continuation towards the monthly breakout level. But that's not what we got. So you have to monitor the price. This is why we have in the coaching, there are setups that we need to see price action according to the setups, according to the rules. And we did not get a setup in this respect. Oh, that one. Okay, there was no setup. Okay, so I was just testing something there. Excuse me. So unless we break back to the downside and below yesterday's levels, there will be no opportunity to trade this commodity at this point of time. Okay, so looking at gold and silver only on the commodities for a continuation to the upside in an uptrend, trending depending on how things set up within my timing window, 10 a.m. and onwards.